Alright, so hello everyone. My name is Abhishek Oberoi. We are starting with Financial 1. Financials is basically your accounting module which has been given to you. This is accounting in the hardcore. CPA examination has 4 subjects. One is financial, the other is regulation. Regulation primarily means your taxation and law, basically your mercantile or business law. Then we come on to audit. Audit is another subset of your accounting module only, and you cannot be a qualified accountant unless you have the abilities and capabilities of auditing standards. And last of the devil in the CPA examination is called BEC, Business Environment and Concept. Why I'm calling it as a devil is because of the fact that it seems like an easy paper with multiple topics, but very frankly that one particular subject is a combination of 5 different subjects, including economics and information technologies. Okay, we are going to start off with financials. Financials, like I said, is accounting. It has around 10 chapters. To start with, Financial 1 talks about the background of financials, background of accounting, what accounting is all about, where it all started, gives you a little bit of history. You would say, why do I need to know about history? It is important because unless you know who's the governing bodies, who are the governing bodies, who elected the accounting standards, you don't actually know whom to go to in case there are any conflicts in future. Probably you get into practice later on, or you're into a world of corporate accounting as well. You will be in a fix where you're working as a consultant, you're working as an advisor, and you are supposed to be handling a situation which is tricky enough for you to not able to crack it through the sections which are given. So unless you know where the entire accounting fraternity come from, you would not be in a position to actually answer to a lot of questions. Okay, moving on to this topic, Financial 1. I hope you guys can see my screen as well. In case there is anything, you can drop me a chat note. We are talking about accounting standards and conceptual framework. The standard setting bodies in the United States is called SEC, Security Exchange Commissions. SEC is the driving body which formulates all the accounting adjustments, has the authority to establish US general accounting principles which are GAAP. However, in most instances, SEC has allowed another accounting professions to establish GAAP and self-regulate. That is what SEC has done. SEC is more in line with SEBI here in India. The intent of having your financial statement is to ensure that the investors' interest is intact. The people who have invested in company know what is coming their way. So the job of SEC is to ensure that the investors, people who have invested in a company, get to know about the company, and it's giving a fair and a reliable information within their financial statements. Who owns it? It's SEC who owns this kind of working. Instead of doing it themselves, they've passed on the buck to other professional accountants. They say, we trust you, you're already qualified, manage GAAP. GAAP is your general accounting principles, US GAAP. Please be very aware of these terms because these are used in your day-to-day life in accounting world. In corporate accounting, please be very aware of these terms. Page number 4, if you see authoritative literature included in codification, a very, very important examination topic. You will say, what is this? Why do I need to go into this? Let's say, for example, FASB gives you some details and you're working in an industry. The industry is talking about, hey, I'm going through a lot of challenges and I'm not able to understand this particular concept of revenue recognition. FASB says I should recognize revenue. Let's say, for example, softwares. FASB says I want to recognize revenue basis on a software basis what I sell, but a software has a life of 5 years. Should I recognize it over a period of 5 years as a revenue, or should I straight away go ahead recognize it as a hardware sold or a product sold? Big question. They come to you, rushing to you. You are a consultant. You are an accountant. They come to you and ask you, what should we do? You will say, we'll go with what FASB says. Now, FASB comes out. These are generic accounting standards. FASB says you recognize revenue if goods are delivered or services are rendered. Man, this is not clear. What do we do? The next step, there is a hierarchy which is being followed. The hierarchy which we are talking is called FED PRIA, F-E-D-P-R-I-A. FED stands for Financial Accounting Standard Boards. The first and the foremost authority with regards if you have any conflict, there are multiple accounting bodies, multiple journals which are floating in the market. Whom do you rely on most? FASB stands on the top. If there is a clear guidance in situation of a conflict, in situation of one authority giving different directions than the other, whom do you go with? You go with first FASB. The next authority after FASB is EITF, Emerging Issue Task Force. If there is a journal which is in addition to FASB, which is in addition to normal accounting standards, which is issued by EITF, Emerging Issue Task Force, we'll rely on that. We will not go with any other document or journal. Followed by D, which is FED, Derivative Implementations, Accounting Principles Board Opinion, ARBs, Accounting Interpretations, and finally, if there are any AICPA documentations which are given to you. All right, so far I have got one question. All right, so Anish has asked us about total how many SFACs are there. So Anish, there are more than 20-25 odd concepts, and these concepts are numbered. If you go through Google, you'll get to have better understanding of this. But let's be very I'll make this very clear for you so that you have this better understanding here. This accounting module or any of these topics which are given to you in this Becker material and the 4 subjects which we are talking have a lot of, if you Google, there will be a lot of information which will be available to you for all the areas which are here given to you in concise manner in Becker material. If you start using other sources, you'll get lost and you will not be in a position to prepare for your examination. You will not be in a position to prepare for your examination. Be very sure that you restrict yourself. This is one of the risks, and if you go through your Becker books, at the end of your Becker books, there is a promise which says that we are trying to give you the best of the material so that you can prepare for your examination. It's the world out there there's so much information available that people can get lost and they'll never get the comfort whether they have prepared enough for the examination or not. Stick to the material. In the material, there are hardly 10 SFACs which are given, which are relevant, which have been asked in prior questions, prior examinations. Stick to this. If you're getting this kind of fear in your mind, let's be very sure that okay, there's always a risk involved. Probably there'll be a 1 or 2 questions out of 90 odd questions which the Becker material may not cover. Underline, double underline. They may not cover, but that's the risk which we are willing to take. We don't want to do a lot of research, spend a lot of time, spend a lot of energy in terms of identifying those 2 areas, and rather not focus on the critical 98-99% of the paper, which we are very much aware of. So whatever is given in this book, stick to it. But if you want to do more research, the world is open. Google it. You will get to know about other SFACs which are available. The other question which Anish is asking is, what is the relevance and scope of SFAC like US GAAP and versus accounting standard in India? These accounting concepts are relevant. If you've done your 11th and 12th standard accounting, you would have read about all these concepts, and we are not talking about these SFACs like they're coming as differences between any gap. I mentioned these SFACs are the concept basis which you define and design your accounting. Accounting across the world comes with the same concept, same ideology, which is debit and credit, assets, liabilities. It does not change. The only thing which changes, or where IFRS, US GAAP or Indian GAAP are going to differ, is treatment for a particular industry, treatment for a particular area. and that treatment is neither right or wrong in any of the financial statements or any of the accounting standards. What US GAAP is saying is a different school of thought. What accounting standard in India is saying is a different school of thought. What IFRS is saying is different school of thought. Everyone has their pros and cons. If you're talking about SFAC, these are the concepts which are like basic concepts building the foundation of all the accounting standards, be it US GAAP, be it accounting standards in India, be it IFRS. You can't ignore these concepts, you can't ignore these assumptions. These assumptions, these concepts are the guiding force behind all the accounting standards across the world. I hope I have answered your question. If you have any other questions, please go ahead and ask. Thank you. Thank you, Anish.